Good morning. Today is June 15th, 2022, and I'm back with another edition of the Wednesday Live Show. And today is, as you know, the big Fed announcement on whether they will raise interest rates 50 basis points, 75 basis points, or 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 whatever. Um, Boy, it's been a crazy, crazy week since last time, and the funny thing is that there's so much going on, but everything's sort of hinging on what the reaction to this Fed announcement is going to be and what they're going to do, and even probably more importantly, what Powell is going to say in his questions and answers section, right? So I expect the market to just go absolutely nuts. So of course the Fed announcement's today at 2 o'clock, and we all know we all know what the market's done this past week or so, right? Um, so last time I was doing the show, I should say, we were here sort of stuck in this sideways consolidation range, and everyone was kind of optimistic. I should say everyone. It seemed to me that the consensus was that this little congestion area was going to break out to the upside, which kind of made sense in a way. And here's the funny thing is that as I recall, and I have a pretty good memory on a lot of this stuff, but this rally off of these lows back here, this little rally was sort of kicked off by one of the Fed speakers coming on TV and basically ditching the idea of a 75 basis point rate hike, right? And that was kind of interesting. And so that kind of got this rally going because the I guess the whatever they call the Fed fund futures were pricing in 350 basis point rate hikes, and everything was pretty well telegraphed and this and that. and basically they sort of took 75 basis points rate hike off the table, and then we rallied up here and we got in this consolidation, and then um, things have been going sort of haywire. Interest rates have been rising. The market we haven't seen anything like this in a long time. I mean, you can go back to the beginning of the year when the sell-off started, and we haven't really seen any sort of a waterfall decline like we saw, these past few days here, these few days, I should say, because yesterday was kind of plumbing the bottom there. But anyway, yeah, that took a lot of people by surprise, I think. The range broke to the downside, and so that was, I gave a little heads up, but I don't think anybody expected that sell off to new lows. And of course, now the S&P is in bear market territory. We're right right around a 20% decline, give or take. Clearly a bear market. I mean, tons of stocks got hammered, have been hammered really since the tech stocks kind of peaked last year. But anyway, since the beginning of this year, the only place to hide has been in energy for the most part, energy and commodities, and then they whacked those too because they were stocks, right? And man, it's been a really, really brutal sort of environment. And before we move on, I managed to save an image here that that I thought was really super interesting, right? And so, I talk about how brutal the market is, but I saw somebody post this yesterday, and so I don't know if it's as of yesterday or the day before, whatever, but it just gives you an idea of what kind of carnage we've seen in this market here. Large cap stocks, right? So I guess that was probably, at the lows or as of the close yesterday. Large caps, small caps, and NASDAQ 100. Ouch. Emerging markets. It's interesting. Emerging markets haven't been, hit quite as hard. The bond market, see the bond market, that's where a lot of the dislocations and the problems are coming in because interest rates have risen so much so quickly. Um, I'm sure you've seen that mortgage rates are up over 6% now, and I've seen some comparisons about what type of house you can buy. At the mortgage rates were, what, three and a half, three and a quarter, three and a half, something percent, not that long ago, and now all of a sudden they're 6%, and so housing affordability has been going down, but basically payment buyers can afford a lot less house. But anyway, long story short, you can basically see here, everybody knows, and if you watch the financial news, I don't really follow crypto or Bitcoin that much. Bill Gates, as a matter of fact, came out today. I saw on CNBC this morning. Bill Gates said, basically said it's I forget his exact words, but a greater fool type of thing, and so he's not down with it at all. Um, Yeah, I mean, Bitcoin was like over 60,000 and it's just barely over 20. Well, it's 21 now, but I think it got down as low as almost 20,000. So anyway, it's kind of interesting. Whoever created this little table here put cash at 0%. But the funny thing about that is the funny thing about that is that there's a couple ways to look at it, right? Like the dollar itself, the dollar index is up like 13, 14% this year against all the other currencies, right? So you could say that, the DXY, the dollar index, is up 13%. Or you could also say that, inflation's at 8.6%, so cash is minus 8.6%. So that's what makes macro stuff so complicated and confusing because the U.S. dollar is but hey, a dollar's still a dollar, right? But anyway, this just goes to show you, and of course it's nothing that we don't know, but I thought it was kind of interesting. Commodities, that's pretty broad too because oil's the most important thing, obviously, and that's what the price of oil, and see, this is where the Fed is really kind of going to struggle. Is because no matter what they do with interest rates, no matter what they do, as long as the price of oil stays high, then it costs a lot of money to move stuff around, right? And of course, now we're talking. I'm sure you've heard just even the regular news now is trying to explain to average Americans why inflation is so high, and a big part of that they say is refinery capacity, right? So no matter how much oil we have at 120 bucks a barrel, they can still only refine so much into diesel fuel and gasoline, and so anyway, it's a mess out there, and basically, the market is reflecting the fact that it's a mess out there, right? The macro picture's pretty rough, and the further you dig into it, and the more that you read about it, the worse it sounds because all these problems we have here, the problems are a lot worse in like Japan and Europe, and so yeah, it's kind of it's an ugly macro picture, and quite frankly, the S&P being down roughly 20% is kind of masks the actual underlying damage, in my opinion. So I always kind of wondered how. Well, I mean, I have a pretty good idea, right? I mean, there's a few stocks, but I mean, look at Apple. I mean, Apple is down significantly at these. And by the way, we're getting a little bounce here, but I mean, today, ahead of the Fed meeting, is just sort of, I guess positioning or whatever. I mean, some people seem to think that the selling has been overdone, and I'll tell you what's really weird is that just all of a sudden yesterday, out of the blue, like one of the big Wall Street firms came out and said they expected the Fed to hike 75 basis points, and then another one came out and said that, and then Steve Leisman came on CNBC and that, and so it's like it's like they telegraphed that to everybody ahead of time, and I'm not sure, I'm not sure why, but how it was just it was a very strange sort of thing. It was almost like a trial balloon got floated, and whether that caused this sell-off, like whether some of these Wall Street firms even got advance notice of that, is questionable too, because this sell-off kind of just came out of the blue. And anyway, and it took back, oh well, this I'm thinking about the S&P. I'm looking at Apple here, but anyway, Apple, Microsoft especially, but these stocks are down significantly, and Facebook changed its name to Meta. Absolute disaster. I mean, look at that. Just an absolute disaster. And so, RIP the FANG stocks, right? Look at that. There's the pre-pandemic high back over here. And so, Facebook, which has changed its ticker symbol to Meta, is now, in the middle of the pandemic, you know, in the middle of the pandemic here, sell off. And so, and of course, we all know what Netflix looks like, right? Netflix just epic disaster. So, RIP FANG stocks. Amazon split. Amazon split, and pretty crazy because Amazon traded in this range, which was 10 times this. It was a 10 for 1 split. It traded in this big range for a long period of time, and then it kind of reminds me of the Russell 2000, the way it rallied up and then just went sideways, big choppy sideways range that broke to the downside and then kind of retested the range and then just fell out of bed. And so, interestingly enough, look at Amazon. It's down into the pandemic sell-off too. So, and for some reason my charts, like this chart looks like a log chart. For some reason my charts have decided that that sometimes they just switch to log charts all of a sudden for no reason, which is fine, but I'm used to looking at just linear charts, right? Unless I go back a long, long time, but it's kind of weird. I've noticed that. Um, Anyhow, so, FANG. Google, same sort of thing. I mean, that's a pretty significant sell-off, I would say. It was 3,000 and now it's 2,100. I mean, do the math on that. And so, anyway, those are the big stocks that are holding up the indexes. Now, of course, the Dow, ExxonMobil. What's really interesting about ExxonMobil is that it went from, I read this somewhere, saw it, which I thought was interesting. It went from a multi-year low here recently, right, to an all-time multi-year high in a very short amount of time. So I believe they kicked Exxon out of the Dow, didn't they? Yeah, I'm pretty sure they kicked Exxon out of the Dow, and so it's kind of funny. Yeah, I don't follow the Dow that much because of that exact thing. Over the years they've added and removed. This is a weekly chart of the Dow, by the way. They've added and removed so many stocks, and quite frankly, it's amazing how the S&P and Dow seem to have a pretty good correlation, despite the fact that over the years they've changed so many of the Dow components. This is a pretty ugly chart. I mean, as long as we're on the weekly charts, weekly chart of the Dow, this rounding top type action, I can't really draw like an arc, but if I could, this rounding top type action is really, really pretty nasty. The thing of it is, and let's go. I'm going to go back to the S&P here. Just go back to the SPY so we can look at the SPY chart. Reflects the opens, and what transpired during the cash session a little bit better than the actual SPX chart. But what I was talking about is is the rounding, the sort of, it's not so much of a rounding top on the S&P as it is the Dow, but the thing of it is that there's all sorts of weird stuff going on. First of all, I remember seeing a stat on CNBC, something about, down 10 out of the last 11 weeks, which you got to go way, way back in history for that to have happened. And then, of course, this week. So this would be, if we end up this week down, that would sort of be unprecedented, out of, to say that the S&P is down 11 out of the last 12 weeks would be something. So it's pretty amazing to see. Now, I've got that trend line drawn across these two highs, and I constantly, since basically since April, when we had that sort of big rally off of the initial sell-off, I drew that trend line across these highs, which I'm not going to draw right now because it's going to skew my chart, especially on this weekly chart. But in my list over here, I've got some charts set up with all the markings on them. But anyway, even though it's intra-week, it still makes sense to sort of look at the weekly chart. This fake out 2 weeks ago was something, though. It kind of reminded me a lot, obviously, of this same rally that we got in March here. And I think that the sell-off that we've seen, prior to yesterday, these few days here, I think really took a lot of participants by surprise because everyone was looking at I was looking at this, and I was expecting, when I was here last week, we talked about 4,200. I think 4,200 almost seemed like a gimme, and then we talked about like these three bars here up at 4,300, and so just sort of these short covering rallies in a bear market can be wild, and they usually go high. So anyway, I don't think anyone was expecting this. Took a lot of people by surprise, and so the other thing I was mentioning before is that energy stocks took another one of their little, and this is going to be interesting to see what happens here, right? Because there haven't been a lot of energy stocks. There has not been much of a sell-off, buying opportunity, like 3 days here and then rally, couple of days sell-off and then right back. And so let's look at this, XLE. And so anyway, this was basically has been, the one place to hide. Obviously there's lots of commodities that have done well, but this has been sort of the one place to hide this year, and it's where all the money's flowing. And then when the market itself took that big winger, these energy, and I just looked at a few of the ETFs, these energy stocks really got sort of whacked too. And so that's kind of interesting. And the price of oil didn't really come down, right? Price of oil is still, right around 119, 120 bucks. So, but there was something happened with natural gas, I believe, and that had something to do with it. I don't really follow natural gas, but there you go. There's natural gas took a pretty big hit here, and that had a lot to do with what's going on. Real quick, there's not a whole lot to say, obviously. Fed meeting today. Quick look at ARK. ARK is kind of trying to double bottom here. The funny thing is that, obviously you guys know that I use this as my proxy for momentum tech stocks, right? It's a good proxy. It's basically, it's an ETF, and in theory, it contains all the new technology, high momentum, stocks that basically have just been absolutely destroyed, right? Like the stocks that the promise of a bright future type stocks, but anyhow, this price action here, quite frankly, is amazing because, it's been impossible to pick a bottom in ARK. this latest sell-off here, I mean, just since April, right? Just absolutely devastating. That percentage sell-off there. But what's happened over the past, few weeks, a month or so, is that it kind of rallied up and held its own. And boy, this little pattern right here, and especially right before it tanked back down to the lows, it looked like it was ready to break out. I mean, it really did. What day was this? Right here on June 8th, you can see how if you were sort of looking for a breakout of this pattern prior to June 8th, you can see that that day intraday it kind of poked up. And so just looking at the chart, anybody just sort of visualizing what's happening on the chart probably thought, hey, this thing looks like it's about to break out and rally up. I mean, that's what it would have looked like right before that happened. And then boy, they just, they call that a rug pull, I guess, is what they call it nowadays. They just pulled the rug on that thing. Didn't quite hit the all-time intraday low here, but nevertheless, huge sell-off, especially percentage-wise. So everything out there is looking pretty nasty. We had a lot of the commodities looked pretty good. We had U.S. Steel as a pending trade, right, based on this sort of sell-off and the idea that well, let's see if I can do that. Yeah, there you go. I mean that pattern right there, that's a pretty decent looking little pattern. Looked like it was sold off, sort of found a bottom, was starting to have potential recover. Basically, the sell-off that's transpired since knocked this off the list. I mean, now it's basically turned it into like a head and shoulders sort of sort of breakdown. So the one that we've only had a couple. We've only had a couple of pending trades. This one's sort of hanging in by a thread, right? It was starting to look like it was going to get triggered in over here, but not quite. Right, this is a pretty decent little setup for a rally back up, but didn't quite trigger us in, and then it fell back towards the lows of the range. But as long as, I'm going to say, and of course you can visualize a trend line across these two low points. If it stays above there, there's still some potential. I mean, sometimes a stock sells off and then looks like it's ready to rally, and then there's sort of one more shakeout leg down, and then it does rally. And so this is still got some potential here. Still got some potential as long as these lows sort of hold here. Right? Draw a trend line through these lows, and as long as it's above that, still has potential to rally back up. It's going to need to obviously get back over 40 here for it to be viable. There's not a whole lot of really good swing trade setups, and there hasn't been. And quite frankly, I should have left that graphic open. So I don't know if I could find it again because I had it all queued up. But anyway, long story short, you all know the story is that at the beginning of the year, the market basically started tanking right out of the gate. And I'm not even talking about the Qs, but there you go, right? Even the Qs, the S&P, I mean, the market itself, right out of the gate, the market started selling off at the beginning of the year, and never really, in a lot of stocks, never really set up for a swing trade. See, here's the thing about swing trade bottoms are kind of formed, right? I mean, yeah, over the years, a lot of traders have been conditioned with these V bottoms, right? Lots of V bottoms, and so the market sells off and then just turns right around and rallies straight back up, right? And so we saw that a little bit here in March. However, we're in a different sort of environment right now. I mean, all the comparisons that I see to recent history don't take into account the fact that inflation, the Fed absolutely has to fight inflation. And so, they're raising interest rates into a slowing economy, and inflation's out of control, and interest rates have already skyrocketed, and there's a lot of crazy stuff going on. And so I don't just expect, I don't expect just a V-shaped recovery straight back to the highs. And so I think that there's a lot of market participants that haven't been around for too long, and they look at like this recovery here and they think, okay, well, we're just going to have a big sell off. And the same things happened over the years. It's like 2015, 2016, which is ages ago. I mean, that's ancient times in market history based on, how young a lot of these. You remember when Goldman Sachs came out and said that the majority of their employees were under 35 or something? But anyway, yeah, and so like 2015, 2016, we got some W patterns where the market would, it bottomed out, rallied, sort of formed like a W, and V bottoms weren't really as prevalent back in the day. The market liked when it sold off, it liked to sort of retest the lows or make a higher low and kind of work itself out. And the type of market action that we see nowadays is, it's odd. It's a little bit odd. Like you get these sell-offs, and then all of a sudden, well, what I'm saying is we've seen sell-offs where you get a sell-off and everybody kind of freaks out, and then all of a sudden just turns around on a dime and goes straight back up, right? And so I'm not sure that we're in that sort of environment right now because, the big question out there is whether the economy is headed into a recession. And if it is, and they talk about this all day I don't even hardly listen to CNBC, but I have it on. But they talk all day about, the odds of a recession and quite frankly, hey, it's funny to hear because the last GDP print was like minus 1 point something, and so all we need is another GDP print, a negative one, and then theoretically, that's what a recession is, right? So we could already be in a recession, but the Fed raising rates, I mean the path that they're on is definitely going to it's creating some chaos. And so the thing of it is that they created this monster, right? They created the monster, and now they got to rein it in, and that's gonna create a lot of problems for everybody, I guess. So somewhere I saw that like half of all the money in existence, you can look at like what is M1 or M2, half the money in existence was created, in the past few years, right? Since the pandemic or before the pandemic, heck, I don't know. I mean, they started this whole craziness back in 2008. I've actually, and I don't want to get too far into this because, I mean, hey, it's Fed Day, right? So it's going to be wild to see what happens. Today's probably going to be the most interesting market day in a long time. And, not from all the talking heads and all the people that, are going to talk about it, but just to see how the market reacts to what they do and what Powell says, right? And how the market perceives it. It's going to be just fascinating. So typically a sell-off like this, I mean, I don't want to make any predictions here, but just based on what I see here, I would kind of expect that this first gap to be closed in relatively short order. I mean, just a runaway gap down like that is in the market. I mean, you see this in a stock, right? Occasionally. But we've been in this sort of environment for a while now that a lot of people I think are shell shocked. I mean, they kept talking about an orderly sell-off in the market, and then which has been relatively orderly of a sell-off given all the crazy stuff that's going on in the world. But This is what you call disorderly. That's a disorderly sell-off there, and so got to you got to step back, and I would say that. And so, quite frankly, we've had very little activity in the swing trades year to date, which is fine. I know, it's kind of boring, and we wish we had a bunch of setups and trades in that, but theoretically, the idea of sort of stepping aside and avoiding all of this carnage, or the majority of it. I mean, there's a few little swings and stop outs here and there, but very very mild, very minor. We do have one open trade, and it's basically hanging in there, right? The coffee ETN. And so, looking at this chart here, doesn't look too bad. You got the little W pattern, you got kind of a cup and handle thing forming here. And so while it's volatile and low volume and kind of gappy in that, bigger picture, it's still hanging in there. There's some materials and energy stocks that I think are probably going to set up. It really depends. And so a lot's going to hinge on, what happens over the next few days and how the market digests what the Fed does today. So it's anybody's guess, and it's anybody's guess, how the market reacts, quite frankly. So, um, yeah, all I can say is that it's been a long time. I mean, the pandemic obviously was sort of a black swan, the pandemic sell-off, and as you recall, that transpired so quickly that nobody even had time to think about it. And of course, the Fed lowered interest rates to zero and threw trillions of dollars, at the problem, and that basically is what turned everything around. And so now they're forced to sort of reverse, the damage that was caused by that, and I mean, nothing about this chart. Every single one of these lows. Here's something to keep. I'll leave you with this, and then I'm gonna just wrap this up. Every single, every single uptick and every little move off of these lows, somebody was trying, CNBC comes on, asks every guest, do you think we've seen the bottom? Are we near a bottom? This and that. And so everybody's trying to pick the lows, pick the bottoms and that. And as you can see, that hasn't worked, right? And so, and even spots where, that looked like, hey, here's a perfect pivot low. There's another perfect pivot low. There's a big rally off the lows that, came up over the previous high. I mean, every single one of these patterns that it was basically a false rally, right? And so trying to like pick the low and trying to add money or jump in or whatever, I think is not the way to go. The way to go is to be extremely, extremely patient and and not try and catch the lows, not try and catch the exact lows. So, the funny thing is that a couple weeks ago when we were rallying here, given the macro picture and given everything that's going on, I can't. It was hard for me to think about taking any sort of stand and saying, okay, well, the lows are back in, and now we're going to head back up to the highs. It just doesn't, and we're seasonally in a weak part of the year, the summer months, summer doldrums. So just remember that trend line. Here, I'll randomly, there we go. Just remember the trend lines, right? That's a weekly S&P chart. And by the way, you guys probably remember, when this trend line broke here, you remember that was kind of a big deal. I mean, it's as simple as that. There's so much stuff out there and so many ways to make this complicated, but that's a weekly trend line that went on for over a year, and when that sucker broke, well, you can see what's happened since then. And then here you go. There's the downward sloping trend line, and obviously, hey, there's a lot of rally that could potentially happen between between here and up here, but don't lose sight of the fact that the market, and I always say this, the one thing about technical analysis is that there's a few things that are just absolutely like laws of physics, right? So it's a law of physics. The market can't rally back to the highs without breaking through that trend line. So, which I'm going to extend here in a minute. I like to I don't want to mess up my charts while I'm doing the show here live, but that particular trend line right there is and so here we are, way oversold. You can't see this on the chart, but the weekly RSI on the S&P is just well, for whatever reason, it's not showing me what it is, but I mean, it's down here around around 30, so that's kind of interesting. You can see how the RSI here can stay overbought for a long time. It can stay oversold for a long time too. So anyway, that's it. That's that trend line is the big thing to watch. Let's see if I switch this back to a daily. Oh yeah, that's kind of cool. My trend line actually stays on the chart. If I switch back to a daily, let me pull that down a little bit. These charts are a little tricky to work with, but what I like about them is that they're real time, and I like these these ACP charts better than the regular stock charts. Um, now this little congestion area, a ton of volume built up in there. You can take a chart and add like volume at price or whatever, and so a ton of volume built up in this area, and so down the road on rallies, that's going to be a significant the underside of this, and just basically this congestion area is going to present a significant area of overhead resistance. So over and under on the market at this point, still, on the S&P anyway, still 4,000. So, it's not been a very forgiving market, right? I mean, it's okay for trading, that's for sure. There's lots of opportunities for quick in and out trading, but swing trading, not so much. Not yet, anyway. So I'll leave you with that and enjoy the Fed day, and I will see you back here same time next week.